Hi guys, this is Chris Morton from binaryoptions.net.au, and in this video I'll be going through another tutorial, and this tutorial will be based on binary options expiration times and chart timeframes. So to further add to that, it will also relate to the correlation between expiration times and chart timeframes. Especially with candlesticks in a charting program. I encourage you, if you haven't seen yet, to go back to my previous video on stock chart programs and which ones are the best to use before going on and watching this particular video. Also, if you haven't watched any of the earlier videos, I encourage you to watch them before watching this one, as they all will help further your understanding when you actually get to get into binary options a bit further. So a binary options expiry rate is defined by, when trading binary options, the value of an asset at the expiration time, the expiry rate, relative to the value of the asset at the start of the trade, the strike price, determines whether a trade has been successful. So we'll go through an actual example of using or how the expiration times contributes to the overall picture of actually placing a trade with binary options. So moving on to an actual binary options trading example and how the expiration time contributes to the overall execution of a binary option. So for example, you open a 30-minute expiry trade of $100 on the Euro USD, predicting the price will go up. So if the option expires after the 30 minutes, higher than the strike price, the price when you placed the trade, your prediction was correct and you won the trade. So if you were to get in on the Euro USD and the actual value of the Euro USD was $1, and you placed a 30-minute expiry trade, putting say a call, which is predicting the price will go up, and then 30 minutes later the price is $1.02, you've actually won that trade. This is tradingview.com, and here is the Australian USD asset or forex pair, and to the right of that is the current time frame that this chart is in, and as you can see here, there are various time frames available, all the way from 1 minute up to 1 month. So what does it mean to have your stock chart on set on a various time frame? Well, basically it means you're showing every particular candlestick in this chart to be drawn in 15-minute lots. So for example, that this particular candle opened at a price and 15 minutes later closed in an upwards direction at a price, and the red candle means that this particular candle opened up at a particular price and 15 minutes later closed at a particular price. And obviously changing the time frame means that the candles also represent that particular time frame of collecting data. So this particular candle opened up at a particular price and then 1 hour later closed at a particular price. So here are some common expiry times and time frames which are best suited when getting into technical analysis, which we'll cover further in further tutorials. So there are probably about 5 popular expiries to choose from, being 60 seconds, 15 minute, 30 minute, 60 minute, and end of day. And here I've actually done a correlation of which chart timeframes you should be analyzing when trading on those expiry times. So for 60 seconds, 1 minute. For 15 minutes, 30 and 60, obviously 30 minutes, 1 hour, and end of day the 4-hour chart or the daily chart. So a common question I get asked is, which expiry times should I be using? Well, this is really dependent on your trading strategy. In further tutorials, I'll actually be releasing various trading strategies. A popular one I actually have out there is my 60-second trading strategy. Now, this strategy I made about over a year ago, so it's a bit dated, but you can still go through it, and I'll be planning to add a new one later down the track. I also have some other ones on my site or on my channel. If you were to search through my channel, you'll see there's actually quite a few different strategies out there. Once you get your head around binary options and how it works and how you can profit from binary options. So here are some tips when trading binary options in regards to the expiration times and which ones to choose, and also how to use it with your charting software. So the first tip is to zoom out. I'll explain this further opening up TradingView. Okay, so I've opened up the AUD USD 15-minute time chart in TradingView. And if we were to be trading binary options and we opened up this chart, this is what we'd actually see on the default, zoom level. And you can't really tell too much. It sort of looks like a bit of a sideways market. There's some ups and downs here. So if we were to slowly move or slowly zoom out, we can start to get a clearer picture of which way this particular forex pair is actually moving. And as you can see here, the Australian dollar against the US dollar is in a downwards trend. So this can definitely help in your trading strategy on how you wish to trade potentially 15-minute expiries or higher. This particular bar or trend line is made by connecting two high points in the market, and also the bottom trend line is by two lower points in the trend market, and this presents the trading trend that is in a downwards direction. So along the way there'll be various opportunities to place call and puts and make some profits. So my second tip is to use a dual monitor system. Now this isn't a prerequisite, it's basically just an ideal trading setup for you. So one monitor is for your charting software, so whether you're using MetaTrader or TradingView, is to have that set up on one particular monitor, and then your second monitor to be used for your actual broker account, so your trading platform. That way you can easily see what's going on in your stock charts and your analysis, and then quickly get into placing the trade. So make sure you've actually logged into your broker account, that it's funded, and you're actually also on the actual asset that you are basically looking at on your stock chart, so you're getting in the best possible price. The next tip is to analyze the popular expiration timeframes that the pros use. So the most popular ones are the 15-minute, the 1 hour, the 4 hourly, and the daily timeframes. My last two tips are, to actually keep following all my tutorials. Subscribe to my channel. By doing so, you're going to be getting all handy tips and strategies. Also getting our daily chart analysis, which is going to basically get you up to speed if you're new to binary options. So I highly recommend subscribing to my channel. And my last tip, and this is a personal opinion, is to use the higher expiration timeframes, as they are less random, or in my experience they are less random. So that being 1 hour expirations is what I usually personally like to target. I just find that when you're going into the smaller timeframes like 60 seconds and 15 minutes and 30 minutes, it is open to more risk, and it's more random how a price might be reacting in any particular time. Whereas over an hour, you can get more clear trends.